Our next guest calls the market's push higher from the lows, quote, the most hated rally. Tom Lee joins us, Fundstrat Global Advisors, Head of Research and CIO, joins us here at Post 9. Tom, it's great to have you back.
Yeah, great to see you all.
Why do you think it's been so hated? Because April was so sort of near death?
Yeah, I think it's hated because not only was it near death, but it was a dire economic scenario that in people's minds is still unresolved. And yet the markets have rebounded the entire decline and actually now approaching all-time highs. So it's been too fast, and I think a lot of people liquidated and then never got back in.
Which part was too fast? The rally or the April lows?
Both. It was a waterfall decline.
Yeah.
And we look back since 1900, of the 12 waterfall declines previously, almost all are V-shaped bounces, except for 2022. So I think it aligns with history. But even on my way here, someone stopped me and said that they're, just a person who watches CNBC says they're still bearish. They don't understand why markets have rebounded. I think the majority of people are bearish.
People stop you on the street to tell you that they're still bearish?
And then what do you say when they say they're still bearish? Do you
say buy, right?
Yeah, what do you tell this person?
Well,
you probably love that.
This person watches CNBC because he was telling me that he's like...
Many people watch CNBC,
a lot
Tom.
of people.
Many, yes.
Yes.
We get stopped all the time.
Yes.
But what did you say in response to I'm still bearish?
Well, they said PEs are too high, and I said, but the 10-year can come down because Powell thinks there's inflation risk premium in the 10-year yield. And if that comes down, then PEs aren't expensive.
So I do wonder, with that as your bull view, that rates can come down. So I mentioned the weaker jobless claims today and how that's sort of creeping up. I've sort of been sprinkling in some weakness in the jobs market. Do you think that the stock market will be able to withstand that if we really start to see weakness in jobs because it means Powell's going to be closer to cutting?
Yeah, it's a good question. Joe Weisenthal called it like a slow leak in the economy, and I think it's accurate because there has been this shock. We know that like in the beige book, port volumes took a hit, trucking took a hit, but is that just a blip or is that the start of a downturn? And I think the markets are going to be able to suss it out eventually. But, I mean, so many stocks are acting well and the guidance has been better that I think it feels more like a blip.
Have you been unnerved by any of the macro data that suggests maybe data center, construction, manufacturing?
Economic value add comes in. So I think so much of global GDP the next 10 years is coming from AI and cybersecurity. And
you think we're seeing some risks to employment on that front already, whether it's Amazon robots getting tested or even some of the layoffs in financials, let's say?
Yeah, it's like economists call distributional consequences. Distributional consequence of AI is that there are PhD level AI robots now that can do a lot of jobs pretty well. So I think it is going to be important for policy to sort of find ways for us to work.
I also want to, that's a big statement.
That's not to work.
Yeah, that's a big statement. I mean, these are sort of societal questions that we have yet to grapple with, conceivably.
I mean, and in theory, one future outcome is the workday is 3 days.
Well, you hear a lot of people talking about UI. I mean, that comes up. Even with people, I'm shocked to hear them, people who would, normally from the political spectrum, I'm like, what?
Yeah, and maybe the retirement age drops to 40 because there's economic surplus from AI. I mean, we really don't know.
What happens in the stock market then in that scenario?
I think.
I know we're talking long term here.
I think the market will have a different yield curve in that world because of digital settlements and risk premium will change. So I think multiples of good companies could go very high because we have more confidence of their durability. So the S&P could really do very well.
You don't want to give any exact numbers.
Yeah, but in a world where the S&P is providing the labor, shouldn't that be reflected in the stock price?
Conceivably, margins will be enormous, one would expect.
And they'll capture more top line of the economy as well.
That said, I don't know what we'll all be doing every day, but...
Well, watching CNBC, obviously.
That's what the agrarian economy guys used to say, right? What are we going to do? We don't plow the fields every day. Tom, to come back soon. We'll see you soon.
Yeah,
Tom
see
Lee.
you soon. Thanks.